Fari.
What are you listening to today, Fari? What's going on there? Are you at a rock concert?
That's that.
No, he's got the Led Zeppelin going here. Look at this. He's cranking it. He's pumping us up here on.
Are we going to get in trouble for
Fari,
streaming this over
I
the air?
can't even hear what you're saying. What's going on?
Dazed and Confused. Led Zepp.
Is that what this market
Number one
is?
album, 1973.
Is this market dazed and confused? Is that what this market is? Because we seem to
We told them they don't listen to Benzinga. We told them back in Labor, right after Labor Day, oil is going to 60. On Thanksgiving, we said 56. They didn't listen, so now they're dazed and confused.
This market is still trying to figure out where it wants to go. Okay, Fari, I gave
down,
you
down. Look at Hunter Killer Sub. I posted the charts last night. I showed the logic. I'm trying to explain to you because there's no one indicator that's going to tell you what's going on. It's a preponderance of evidence. Down, baby, down. So,
are you saying down on the overall market or still down on oil?
No, the overall market.
Overall market.
We're not done with the damage here. And Putin still is there. This is not going to turn until Putin gets to Sochi in his new place and done, like Nikita Khrushchev after 62 adventures.
So what's your target here on the mini futures there, Fari? Where do you think we're heading?
We'll take 45 out easily on the S&P. I don't know what you mean. You mean those? I trade them.
It's the same thing. It's the same thing right now because we're rolling.
Yeah, of course.
Month, so.
But you got to look at right now we have some cash, cost of carry. So there's a little bit now toward what do you call it? Towards expiration, they converge, as you know better than I do.
Yes.
But 1945 is a given, not a question there. Let me give you a little forward look here. I think we'll see 1925s right now at this leg. 1925s, yeah. I think we'll see that. Then we have to assess at that point.
Why?
Pardon me?
Why do you think
these are Sigma charts? Those are Sigma charts on weekly. Sigma charts on weekly. So when you're confused on daily, step back, go to weekly, and the weekly doesn't make sense. You got to go to monthly. But then the error gets too big. Keep that in mind too. You're as good as one window, one bar forecasting forward in terms of good accuracy. After that, standard deviation starts playing with your numbers. It gets too wide.
It's a great point you're making to use multiple time frames because so many traders that are day traders and they just look at the intraday and there's so much information you can extract from the weeklies or even the monthlies for the intraday trading. So
when we do our webinars every month, every Friday before non-farm, toward the end I just take stock questions. Just going through stock. People who have trades, they have the trades on or think of putting an option trade on. They come and say, "Hey, what do you think about this or that?" That's the screen I open. Monthly, weekly, daily, and hourly. And it's the same indicators. It's just different time frame. I just type in the symbol in one. Trade station is running it. So boom, show them all four, and then I explain to them how do you go from this to this. Because that's how I even pick my trades during the day or monitor a trade during the day. From let's say the option trade you put on, that's how we look at it because you've got to really understand the bigger guy who's trading monthly, the super bigger guy. Yeah. The smaller hedge fund who's trading weekly, money managers may be trading daily, and then you and I jump in there hourly.
And then you got the high frequency guys trading millisecondly.
Nanoseconds.
Well, those guys have no clue what's going on.
Nanosecond.
Well, but those guys are trading by, it's not them, it's the machine, the software.
Yeah.
Yeah, and it's, I don't know where those guys go long term because the marketplace is pretty up some of them. So.
Isn't it just noise, high frequency trading? It's just kind of noise though, because the fundamental traders are still they're going to be your drivers, right? Like the stock, they're going to drive. That's going to be what drives the stock is the big.
The reason you have HFTs is because they took the pits away. That's it. They're just electronic market makers.
So you don't have any concerns really with high frequency trading. Are you concerned with any? Because we've never talked to you really about high frequency trading. Are you concerned with that we don't have the pits anymore and it's gone too electronic? Is there any concerns?
No, I'm not concerned at all. I hated those guys. First of all, the cheating they went on. If you spend any time on the floor, you'd see a majority had their hand in the till. The decks would change around and runners, all that stuff. And the big guys didn't want it. The reason we don't have the pits is because big guys could see what I'm talking about. They didn't want it. They wanted time stamp. down to 1,000 of a millisecond. So I know which order came in. Machine is running it. You know, I don't have. What if my guy's not there today? You know what I'm saying? So no. This now it's got timestamp. And the big difference that started was after CME. There's a fellow named Mario Alberico who actually endorsed my book. He was the one who did ES, Senior VP of CME. He did the ES. He came from Reuters. He ran Reuters for all of the U.S. and out of Chicago. We became a Senior VP, and now he's with Accenture. He's a partner at Accenture. He did ES. The moment the initial ES was successful, okay, that was running, the software was good, the limit was 25 contracts. They did a survey, and everybody says, hey, let's go to 250, and they changed the tick size. The moment they did that, Pittsburgh instantly wiped out. I mean, there was nothing left of the floor. Why? Because the big guns moved.
Is that what really knocked them out of? And that's what really knocked them out of the equity markets too, right? When we went from back in 2000, 2001, yeah, when we went to decimalization, because we went from 1/16 of a point, the spread, down to a penny, and then electronic market makers were just more efficient at moving their quotes around fast enough, correct?
Exactly. Yeah. I mean, I spent a lot of time with Mario about all this. After I got to know him, and I knew him like about 2000, 2001. And then 2005 on, which I wrote my book, I spent some time with him every time I came to Chicago. And, of course, here I see him often. That's basically the history of it, yeah.
I'd like to ask...
It happens, my friend. It happens.
Could I ask both of you about the impact of HFT? Because we had a market where you had human perception, and the market seemed to represent, to an extent, the perception of human beings. But now that it's more computer-driven and they can analyze more data, or they can misread something or not realize that maybe there's some errant information, do you think that this actually impacts the base in the market and the price behavior that we see? Because it seems like HFT trades on a shorter length than we can even comprehend, and that kind of seems to be at odds of what we're trying to do in a market. Do you guys think that it could be skewing price beyond what's reasonable?
It's a tail event. Majority of the time, everything's gonna go smooth. Okay, but it's a tail event, so that at certain sigma levels, or standard deviations away from the mean, we're gonna have an event. That could happen, but you don't think that happens with manual trading or manual market making?
No. What's that?
That, of course. Well, no, but not that frequency, but in terms of that, the event there could happen too. If you recall, February 27th or 28th of 2007, the big Qs day, we were down 300 points on the Dow, and at the last hour, at 2 o'clock Chicago time, somebody put an extra digit in there on the Qs, or 2 digits extra on the Qs, and it just exploded. And we were down 500 points and became a sigma event. That could happen too, but again, that's a tail event.
But that's one thing that is different there, I would say, Garrett and Fari, is that you did have human intervention before. So when you had an extra digit going on, like somebody floor and they want to sell 100,000 shares and they accidentally send an order for sell 1 million shares or 10 million shares, the trader on the floor, the designated market maker, might say, is this order correct? Like, you might double check it. Yes. Now if you press that button and you put the extra digit on, that order is done. It's instantaneous execution.
You bought it, yeah.
And that's why we see so many of these like more fat fingers or flash crashes. It's more that the errors, there's no check. I mean, it's gone. You send that order for 1 million shares, it's gone. It's done.
Yeah. Well, the purpose was to create more liquidity. They are. And part of the liquidity is you can't retrieve it. See, if you didn't have liquidity, it would sit there saying working, right? Pending, working.
Right.
When you have liquidity, it's your baby. You got it. Next. And then next question.
Oh, next question. Okay, Fari's got to
Mari,
keep the show
Mari, tomorrow's my birthday. I'm in good mood. Come on, talk to me.
Tomorrow's your birthday?
Yeah.
Oh, well, happy birthday, Fari.
Happy birthday,
and
Fari.
I have some dental work to do, so I will be comfortably numb.
Dental work on your birthday, so you're looking forward to that.
That's the only thing they had. Well, first of all, it's very small.
Who does dental
my doctor he's such a finesse, and he's with me. Actually, he's a club member, so his locker is like 2 or 3 lockers away from me at the club. So he can't run away from me. So he goes, hey, we gotta get this done. It's very small. If we get to it right now, there will be no problem. It's okay. It's a refill. And I said, it's my birthday. That was the only opening they had. And then I said, you know what? I'll trade a little bit in the morning. Give me an appointment midday like 11, and then I'm gone.
Wow, dental work on the birthday. Okay, let's bring you back into the markets here. Get away from this dental work. What is the Fed going to say today? 2 o'clock. We're going to find out. What are they going to say? Are they going to spook the market, or they're going to just kind of go with the flow?
If I knew it, I couldn't tell you. If I tell you, I'd have to kill you. Well, hold on. Let's see. This is CIA stuff. Yeah. I think there'll be days that confuse too, in a bet, in a sense that this is a tail event for them. Who would have thought, except you and I here on Benzinga, that we're going to go down this? Even we didn't. First of all, let's step back. Even we didn't expect it. You and I talked back in the Labor Day period. We didn't. I was talking about, if you recall, about 18 months. That would put us about January of 2016. Who would have thought we would come and hit 60, go beyond in 60 to 75 days? This is. Yeah. And remember, oil is the largest world commodity, as printed or given by the UN. There's a UN commission that deals with all the population and data and so forth. In a dollar rated, oil is the largest dollar-denominated commodity, and we moved this much all of a sudden. So I think they'll probably be scrambling to see what they need to do. This is definitely deflationary, and is going to create a lot of surge in certain industries like retail, airline, hotels, travel. The number of areas that will get impacted, and yet also we're dealing with 9-10% of S&P. We're dealing with 2 or 4 states are going to be in massive depression for a while, like Oklahoma, North Dakota, South Dakota, part of Texas. So this is a major, major impact. Hello? So would they really know what to do? I don't know. I don't think so. I think we're going to see a baffled FOMC. I'm also expecting a possible sell-off later on today. We'll see. And here's the other problem. You're going to have the press conference. This is a meeting with a press conference, right?
Yeah.
So every question technically is a trade. Every question. So you say, hey, do I want to trade the press conference, or do I want to trade it after it's all over?
And we've had volatility going into this report, so coming out of it, it's going to be very interesting here. So it's going to be a trader's market. We know as traders we do love volatility because it's more opportunity for profiting. But
but be careful what you wish for.
Yeah.
I mean, look, where's the vol last night? Last night, I posted a chart at Hunter Killer Sub on Twitter. Let's see. VIX hit 23, close 23.57. High was 25.46. Okay. But that's just only 3 sigma. The 4 sigma for yesterday was 29. And it hit 29 and had the right chart on it. But you didn't look at October. It hit 4 sigma and had a reversal. Intraday, that was the low. Hello. The chart is actually signaling to people who know how to read it, it's time to go in. And SEC can't come and say you collaborated with each other or colluded, okay? The chart's not telling you. The chart is the message. Think about it, okay? So you got to realize what to look for. Everyone worked before. This is what worked before. We got to wait for 4 sigma and a reversal of that day. We haven't seen it yet. It's not there yet. So more vols ahead. Maybe we'll take a pause because we are at, last night Momo was 10.6. That's the HA Momo. The 10.62, we're in a bounce back territory. We have to, at least a little bit, bring in some suckers, bring in some weak longs and then massacre them later.
What about crude? Do you think crude's getting the bounce back here too? Because this morning we're up here on the S&P futures, but crude's still not really getting a lift. We're trading down $1.12 from yesterday. Yeah. Where's the sigmas on crude, and when's crude going to get this bounce?
I don't run. You know what? Maybe I should do that. I don't run sigmas on crude. Can you believe that? I'm not even a crude trader.
But you got to watch it.
That was a macro call.
But you make those calls. He was calling at 75. He was calling $50, $60 here 3 weeks ago, 4 weeks ago, and nobody said it was possible. Fari was all over it. And you don't trade it.
I don't trade it.
All over it. You
You
were
know
all
why?
over
Has
it.
no internals. Has no internals. It's
Yeah, I know you
volume
like the
and price.
internals.
You know, I need a machine. I built 747s. I want to see a 747 cockpit. I want things showing to me the internals, the ads, the differentials on the volumes and the tick and trim and all that stuff. You don't have anything like that on the Crude.
Well, I
Plus,
don't
it's such
care.
a flat.
I don't care that you don't trade it because you make awesome calls on it. So I got to know where you think crude is going because I'll trade it. So I need to know where you think it's
I
going.
think 50 could be doable now. Remember,
Yeah.
we can't keep on going lower. There's
Yes.
some point where it becomes
We're gonna bounce.
asymptotic. Okay, right, yeah, exactly. Yeah. I mean, no, it's not doable. You can't produce it. So people need to, because the cost is more than that. They'll shut down the wells. I heard 40 out there. I tell them now, these are the guys who, remember, these are the guys at 90 that says it's going to go to 100. Now they call it for 40. I think 40 is way out there. But
You don't think 40 is
50.
possible? You don't think 40 is possible?
No. But look at 40. There's a total collapse of Russia. Okay.
So you think,
Now, remember they dropped how much? 12% yesterday. They really technically had a crash yesterday in the markets, and now it's hitting the street people, average guy, not the oligarchs. It's hitting the mom and pops and people, the working levels and all that, because the importing is going to be so heavy, so costly, and where do you use the cash reserves? If the currency reserves they have, would the central bank use it to calm down the traders and the players, or feed the people? Remember, everything else is locked up. This is very unusual. You sanction them, and then the price of oil drops, some magical way, which I don't believe there is. Here's my, if you really want to hear my 2-minute explanation. For a small fee, we explain anything. That's what I told Brianna the other day, when she had a question for me. Here, I think we've alluded to this before. There may be a deal with the White House and the House of Saud saying, bring the price down, let the price come down a little bit. We'll put with pressure for us, for White House, on Iran and Putin. While the sanctions are already on, the sanctions are pre-existing, and it'll continue the pressure on them so we can get the best negotiation out of them. The question becomes, what is House of Saud incentive would be? Notice every time in the past, OPEC cut back. Every time there was a glut, OPEC cut back, prices adjusted. This time they haven't touched it. And Naimi said on Thanksgiving, that was the clue. Naimi said in Vienna on Thanksgiving, he said, I think OPEC is right now. Each member may make their own decision. Basically said, don't mess with us. We're going to make our own decision. You go and do your own to other members. All right, now, to me, the missing part is ISIL. ISIL had declared that after Iraq, we're coming after the House of Saud. In so many ways. Like, we're going to go south. There are other things we want to do. What is south of Iraq? It's Saudi Arabia. Who can protect House of Saud? Do you think their army and their Air Force can protect them? The Iraqi army was paid by us, trained by us. Last 12, 13 years we've been there, or 11 years. What happened there? Hello? At Mosul. So I think House of Saud is scared to death of ISIL. The only person who can assure House of Saud continuity is Barack Hussein Obama. And that's the missing piece. It hits me. There's a deal that must be going on back channels saying, you let the oil float anywhere it wants to go for about a year, 6 months. They'll be done. Iran will be done. Putin will be done. And then, this is your insurance policy. We will be there to protect you if, God forbid, if ISIL crosses, let's say, the Shia areas of Iraq and south. Then, because they have to go through that before they can get through. There's no other way. Otherwise, you have Jordan there. If they want to go into, they can't go to Jordan. Jordan's a little bit too strong for them, too ready. But Iraq was a total disaster. They got to go through there to come through, and they won't go to after Kuwait. They want to come down here. The problem is all on the eastern side, the southern part, eastern side of Saudi Arabia, the southern part of Persian Gulf, that area, where Bahrainis are, that area. And that's where the chaos is also. So, because of Shias, they want self-determination.
All right. Well, Fari,
I
thank you.
think that's what the problem is.
All right, thank you, Fari. We're going to have to wrap it up there and let you go, but we
Yes, sir.
appreciate the insight this morning. Thank you very much. And, guys, keep an eye on oil's downside, but Fari's not seeing it going to
Thanks,
40.
Gary.
All right, my man. Have
Thanks,
a good
Fari.
week.
Good
Thank
luck
you.
at the dentist.
We'll do.
Happy
Go and make
birthday.
some shekels.
Okay, we'll try.
Bye.